And we thank you very much for joining us. Welcome to Business Incorporated, live from Lagos. Channels Television, your home for news and, of course, business news. I am boosted for you at this time. Let's start the show by looking at the Kenya's biggest bank by market value. Equity Group Holdings posts its first annual decline in profit. And Moodys Investor Services new report estimates total GCC global debt raisings of $32.5 billion in 2017, plus global markets now waiting the final hours of Janet Yellen's FOMC decisions on interest rates. This is what the next 30 minutes of the program looks like. And we're starting from that news about an hour ago. In Kenya, the biggest commercial bank by market value, called Equity Group Holdings, posting its first ever profit. A drop in annual profit, missing analysts' expectations for an increase as non-performing loans in the bank more than doubled in the period under review. Net income declined to 16.5 billion shillings in the 12 months through to December last year from 17.3 billion shillings a year earlier. Bank failures in Kenya at the end of 2015 and early last year, coupled with a government decision last August to cap commercial lending rates, resulted in a very turbulent operating environment in the country last year. A 23% in income from interest charges and loans is under threat after President Uhuru Kenyatta in August imposed a cap on commercial bank rates. Growth in loans to the private sector eased at the slowest pace since at least 2005 last December, when they increased 4.3% compared with 18% in 2015. And look at the markets now, where we are on the African continent. The Nigerian stock markets trading flat at midday today, now about 0.05% in the red. The South African GSE is in some green levels. Well, because that's Kenya is in the red by 0.13%. The GSE All Share Index now turning that 0.07 uptick into the negative territory, about 0.1%. The Egyptian market also still in the red, about 0.31% about the last 20 minutes ago. And the Kenyan market, 126.79 Tuesday closing figure for the all-share index. In the Middle East, markets were edging slightly mixed today, but mostly in the green at intraday Wednesday. Saudi Arabia's Tadawul was up, see that at the bottom of the table, 0.67%. Midday Nigeria. That's after credit rating agency Moodys Investor Services raised its outlook for Saudi's banking system to stable from negative, predicting liquidity and funding conditions would improve. The Abu Dhabi market was slightly negative, Dubai financial market slightly positive, and the Qatar Stock Exchange 0.2% in the red. Meantime, Moodys Investor Services says the volume of sovereign Eurobond issuance will remain within the Gulf Cooperation Council in 2017, but below the 2016 record levels. In a report released on Tuesday, Moodys Services says governments in the region looks to fund sizable budget deficits at a time of strong investors' demand. Moodys forecasts around $32.5 billion of sovereign international bond issuance in GCC this year. That will account for about 21% of the aggregate gross financing requirements for the GCC countries in 2017. Oil-rich Kuwait has raised some $8 billion in bonds in the first quarter of 2017. Last year, the GCC countries raised a combined $38.9 billion through the global debt markets. Today will be very interesting for Wall Street and for markets around the world. The world's #1 central bank, the U.S. Federal Reserve, will be making decisions later today with Janet Yellen. Look at the markets now. On Wall Street, the stocks futures are pointing to a green territory and a positive trading day, with some survey forecasting 93% consensus that the FOMC will raise U.S. Fed fund rates higher. That will be the first time if that happens in 10 years. The Dow Jones Industrial Average that you saw there, still keeping that green numbers as I'm looking at it, 0.17% in the green. The S&P futures about 0.2%, keeping that figure 2367.75, and the Nasdaq futures 5394, around 0.10%. Looks like a very interesting day. And of course, we're looking at a number of economic data out of Wall Street today. Retail sales and consumer prices index for February, as well as the Empire State Manufacturing Survey data for the month of March. That will be at 8:30 a.m. Eastern. Business inventories for January and the National Association of Home Builders data for the March would also be out today. So quite a little bit of March data coming out. That will be 10 a.m. Eastern. On the earnings side, Oracle, one of the world's top telecommunications technology companies, will release its numbers. Guess will release that earnings, as well as a few other companies. So keep your eyes on Wall Street. That's where the biggest news is happening today. But let's get on with the European markets, where today is another very important day for the Dutch going to the polls, choosing the next prime minister. Polling stations open about 7:30 a.m. local time, and we close at about 8 p.m. London time, about 9 p.m. Nigerian time if you're watching the elections in the Netherlands, when the first exit polls are expected. So we're looking at what all this means for the European markets. On the day, we're seeing a few of economic data on the street. Olaf Krieger is my colleague at DWTV, and is live to us for Channels Television from the Frankfurt Stock Exchange. Olaf, it's good to see you on the program. Let's start from the Institute of International Finance G20 conference starting today. What new things are we likely to learn about the state of the world economy and Europe in particular?
Well, first of all, Bosun, this conference is located here in Frankfurt, just a stone's throw from here in a hotel. Well, and the agenda of the G20, well, it's packed, because there are so many concerns in the world economy, in free world trading as well, and there are so many uncertainties, because what is Donald Trump, the President of the United States, is going to do next, because